So can you do velocity banking up in Canada? That's a fantastic question. Is it even possible to pay off your mortgage in 5 to 7 years north of the border? That is a fantastic couple of questions there, and I'm excited to give you the answer in today's training. Hey everyone, it's Mike Adams, and on this channel we empower individuals to achieve freedom through improved financial literacy and business ownership. If you are new to the channel, make sure to click subscribe and click that bell so that way you get notified on any and all of our future content. So in today's video, guys, we're going to be discussing, can you do the velocity banking strategy in Canada? Okay, and really just, do you have the ability to pay off your mortgage early if you have a Canadian mortgage? And that is a fantastic question, and I'm excited to be doing this video. We've had so many people reach out from Canada just saying, Mike, we've seen your videos, I'm not sure if I can do this here. Is this something that works, here like it does down there in the United States? And there are definitely some big time differences. As I've been learning more about other countries and how mortgages work in other countries, there's a big time difference from country to country, kind of how it works and what you're actually allowed to do. And so if you haven't seen my differences video, kind of talking about the differences between mortgages in Canada and mortgages in the United States, make sure to check out that video. We'll put a link to it. It's either going, I always forget, is it this side or is it, it's one of the two, but we'll put a thing that pops out right there so you can go to that video. We'll also put it in the description to make it easy for you. But what we really want to know is, can we do the velocity banking strategy up in Canada? People want to pay off their mortgage. And once they've seen some of the other trainings where we've really shown how much interest we're paying over the life of the loan, hey, that increases a lot of motivation for some folks to pay off that mortgage early. But is it possible? Right? Is it something that we're actually allowed to do up in Canada? So I'll start with the answer. Can you pay off your mortgage early in Canada? Yes. Okay. Can you use the velocity banking strategy in Canada? Yes. Okay. So we got a yes and a yes, but then there's a but. Okay. Yes, but. Okay. Because it's slightly different, as far as how it could actually function. And if I'm being quite honest, it's the savings isn't the same. Okay, it's not as lucrative. Again, as I've learned, just kind of looking at some of the different ways that you could do velocity banking up in Canada, I really just started thinking, gosh, does it make as much sense? Again, here in the United States, with our mortgages, all of our mortgages are open mortgages. And you also are able to lock in for a 30-year fixed, low rate, and not have to requalify all the time, or renew the mortgage every 3 to 5 years. And so again, there's some advantages there. And again, there's also no prepayment penalties. And I've said that a few times now, because that's one of the key things that makes it a little bit different, and really reduces the amount of money that can be saved utilizing a strategy like velocity banking. And so now, talking about Canadian mortgages, how could you pay the Canadian mortgage off early? Now, if we're going to use a strategy like velocity banking, we really have to think quite a bit about the timing. Okay. What we know is that with a Canadian mortgage, typically you're going to get up to a 5-year term on your mortgage, but you're also going to have either an open or a closed mortgage. Again, all mortgages in the United States are open. They can be paid off at any time without penalty. But most people in Canada are going to have a closed mortgage. And the reason why is because the interest rate, in order to get the lowest possible interest rate, the banks are going to want you to have a closed mortgage where you're not going to pay it off early. With an open mortgage, you can certainly get one of those. Okay, you might be able to get the 3 to 5 year term, but the interest rate is going to be quite a bit higher. Typically, you're seeing 4, 5, 6%, whereas on a closed loan, you're able to get in the ones or in the low to mid 2s right now. Maybe 3 if your credit's rough. But gosh, nice low fixed rates on a closed mortgage. And when you have a closed mortgage, there will be prepayment penalties if you pay off the mortgage too quickly or in full, okay? And here's what I mean, in full makes sense, right? If you pay it off early, if you're in year 3 of your 5-year term, and all of a sudden you just pay off the mortgage, there will be a prepayment penalty. But if you prepay too much, you can also get hit with a penalty. Now, you do have the ability to prepay some of your mortgage, and typically you'll be able to have a prepayment privilege of anywhere from 15 to 20%. And so, again, let's say you had a $100,000 mortgage, and again, in Canada, most mortgages are not that low, but let's say you had a $100,000 mortgage. So you can make your payments, and you can, if you had a 20% prepayment privilege, okay, that would allow you to pay an additional 20% of the original loan balance annually on top of your monthly payments, okay? That would go directly to the principal. So if you have a prepayment privilege, you're gonna wanna know exactly what that is, so that way you can pay up to that amount. Without going over it to where you'd then be subject to a prepayment penalty, because those penalties can actually be pretty stiff. But regarding velocity banking, the two things that are required are obviously positive monthly cash flow, okay, the more the merrier, and you also need to be able to leverage a line of credit. And here on the channel, here in the States, there's an ability to get lines of credit with a 0% interest balance transfer promo on some credit cards out there. And you're able to get that promo for, anywhere from 14 up to 21 months on some lines of credit. So, juicy, kind of lucrative terms to do some chunking. Whereas up in Canada, again, the types of lines of credit that were available, guys, I wasn't able to find anything with 0% interest. And so that's, we could still chunk with a line that is, charging some interest, but that eats into the savings, okay? And so, the lines of credit, the terms weren't as favorable for a strategy like velocity banking, because you're definitely gonna pay some interest chunking onto a credit card in Canada. And so when you factor that in, okay, so can we still do it? We can still do it. Will we realize some savings? We'll realize some savings, but you're gonna have to do a little bit of dancing around those prepayment penalties, okay? And as well around the terms of your lines of credit. I was noticing the duration on some of the lines of credit where you'd get a nice low promo offer, let's say 1.9% or 2.9%, but you're only gonna get that for 6 months. And then it's going up to a very substantial 23% or 19.99%. And so that's not a huge window at a low rate to make those chunks. And so that was definitely kind of a bummer, to see that. I was like, darn, if they could get similar terms than what we have here, it'd be pretty simple. Like if they can get their hands on a 0% interest balance transfer credit card, they could go ahead and figure out, again, if you're in a closed mortgage, you could figure out what your prepayment privilege is, and you would just simply chunk that at the beginning of each year onto that 0% interest line, and then use your cash flow to pay that down. So again, you're making your regular payments all year long, using your cash flow to pay down that line before the end of the year. And so you want to make like a nice 12-month chunk, again, keeping in mind that you don't want to go over your prepayment privilege. So again, in our original example with the $100,000 mortgage and the 20 grand, again, you want to make no larger than that $20,000 chunk, pay that down over the 12 months, and then the following year, you could do that again, okay, if you're able to maintain that 20% prepayment privilege. Now, if you have an open mortgage, not a big deal. Because you can pay it down as quickly as you want. You can make chunks throughout the year as you see fit. But again, the issue is that the terms of the lines of credit aren't very lucrative up there. Those juicy long periods at 0% just don't seem to exist. And that's just that's a big difference. And so with that in mind, it's like, okay, thinking, because again, most people don't have an open mortgage. Again, if you knew something was going to happen, like let's say you knew that there was going to be an inheritance, or let's say you knew that you're having a huge bonus come in next year, and you're at the end of your 5-year term, you're like, you know what? I kind of want to pay off this mortgage next year. We have the cash, and we can pay it off in full. If that's your scenario, when you renew your term, you may want to jump into an open and deal with the higher interest rate just for a short period of time, knowing for a fact that you're going to be able to pay off the mortgage that inside of that term. Okay, but typically most people are not, if you're not doing it that way, again, velocity banking is about making chunks, paying them down, making a chunk, paying it down. And so typically you're going to end up in a closed mortgage just to get that nice low interest rate on the mortgage itself. So, can we pay off the mortgage in 5 to 7 years like we can do in the United States? The answer is yes, but using velocity banking may not be the best way to actually do it when you have to factor in, number one, the terms of the line of credit that we have available, and then secondly, the fact that we can only chunk so much based on what your prepayment privileges may allow. And so in this scenario, again, we could certainly run some numbers on that. You guys let me know in the chat line if you guys want to see, me run the numbers on this particular scenario. But it seems to me like sending in additional cash flow directly to the loan itself may actually be the best way to do it. Again, some people are going to say, Mike, that's, what do you mean? We want to always use a line of credit. Maybe that's true here in the States. Maybe that's true for some folks here in the United States. But when I look at the terms on the lines that we can get up in Canada, when I look at the prepayment penalties, it just seems that we'd be kind of jumping through quite a bit more as far as hoops in order to really pull off the strategy effectively. And certainly when you factor in the interest on these lines of credit, and when you also factor in the hoops, and then you also factor in the fact that there are prepayment penalties if you pay down too much, all of that eats into the savings that you would realize using velocity banking. And so with that being said, does it make more sense to just apply additional cash flow each and every month to the loan? And I would certainly say yes in this scenario. It seems like that would be the easier way to do it. So again, let's say, you have a 20% prepayment privilege, and let's bump it up. Okay, we've been talking about this $100,000 mortgage, and that's a tiny house in Minnesota, right? So let's bump it up. Let's say you got, a $500,000 mortgage. Maybe that sounds more appropriate. And again, you got a 20% prepayment privilege off of the original balance. So you can send in all your annual payments, and you can send an additional 20%. In this scenario, that would be an additional $100,000 in principal that you could pay down annually. And so that's a pretty sizable amount. I mean, if you're able to get a full 20%, again, if it's 15 or 10%, even at 10%, that's an additional 50 grand in principal that you could pay your loan down by each and every year. So if you have that kind of additional cash flow that you're able to kind of put into that, that would be a fantastic way to pay down the mortgage rapidly. Again, you're not necessarily using velocity banking, you're simply just applying additional cash flow, but it's still a powerful way to save a boatload of money in interest over the life of this loan. Now, one thing that I would say, and especially in this day and age with what's kind of happened over this year of 2020, is just the thought that you never know what might happen that could reduce your cash flow or cause you to lose your income stream. And in Canada, we have to renew those mortgages every 5 years, okay? And so if you're in a situation where, again, you lose your business, you lose your job, something like that happens, you could be in a position where you get forced into selling your property where maybe you don't want to. Maybe you've made every single payment over 5 years, but you lost your business, something happened in that 4th year, so you go to renew, but the banks have a way of seeing things, okay? When you log into your bank or you log into your credit card and they show you your credit score, how do they know that? Again, it's because they're constantly looking at your numbers. They're constantly looking at your credit to see if you are becoming more or less of a risk to them as a borrower. And so if you get to the end of one of your renewal periods and all of a sudden you lost your business and all of a sudden, they don't want to renew your mortgage and nobody else wants to renew it, you're in a position now where you need to sell. and you need to get out of the property, and that may or may not be advantageous at the time. Sure, right now here in the States, seller's market. If you're forced to sell, at least you're going to get your max sales price right now. But what if you're in a different market where that's not the case, or simply you just don't want to have to sell? So definitely, that's a great reason to want to pay off the mortgage early. Not only to save the money and interest over the life of the loan, but again, you just never know what's going to happen. I mean, a lot can happen in 5 years. Another 5 years, I mean, that's a lot that can happen. And so, if there's any concern, like inside of your business or inside of your career, where it's like, gosh, I don't know how long I'm going to have this job for. I strongly recommend that you make a big play at paying down your mortgage as quickly as possible, with the ultimate goal of being able to pay it off all the way to zero as quickly as you can. A mortgage is definitely a liability, no matter what. It's something that you have to pay for every single month. But certainly, in a scenario where you have to constantly requalify or be subject to a stress test by the bank every couple of years when things change, you could get yourself caught up into a very sticky situation if you have a mortgage and things go south on either your income stream or your business. So lots of reasons to pay down that mortgage early. And again, look at your prepayment privileges. Determine what your prepayment penalties are. And again, if you know for a fact that you're going to have a windfall of cash and be able to pay off the loan in full, again, when you renew your term, move it into an open and pay the thing off. Just make sure that you pay it off during that time, because that interest rate's going to be a little bit higher. Okay, but otherwise, if you're in a closed mortgage, look at sending in additional cash flow up to the maximum amount of your prepayment privilege. If you do that every single year, you will definitely pay off your mortgage quite a bit earlier and save a ton of money in interest that would normally just go right to the banks. So hopefully you guys found value in this training and in this discussion, and really just discovering the best way to pay down your mortgage early in Canada. I'm curious to hear what you guys think about this. Make sure to drop your comment below and let me know what you think. Is there a better way to pay off your mortgage early in Canada? If there is, I'm definitely open to that discussion. Let me know about that in the comments. And this is a really fun video series. Hopefully you guys are enjoying kind of learning a little bit more about how mortgages function in other countries. I have several other countries on my list that we're going to be tackling very, very soon. So be on the lookout for those additional international mortgage paydown videos. But that's all for this one. I will see you guys in the next training.